Hey, morning, folks. Happy hump day and welcome to Q3 of the year. Hope everyone's doing all right. Before I get started, just remember to hit that subscribe button and the bell icon so you get notified on future videos. So let's just jump straight into it. Really positive stuff out of Japanese equities today due to the fact that we have reopenings. Further reopenings in Japan, a subdued yen due to heavy outflows, and also resurgence in the dollar, which is holding, as we can see here. This is an hourly chart on the dollar, just holding, consolidating around the 102 level before we get Fed's Williams and Bullard on tap to speak later today. So these guys might be coming up with communication on the Fed stance going forward, as it's been kind of uh, eh. So speaking of Japanese equities, over here, this is a daily chart on the Nikkei. We're testing this massive inflection point that goes all the way back to the low of July last year. So if you can stay above, there's no reason why we can't test 28,000. Well, there are a couple of reasons why: dollar, yen, and also basically with the growth picture in general. But things seemingly are looking brighter today, if I'm being honest, as we look towards the to open the quarter. So on the Nasdaq, really clear lines in sand. So what happened yesterday was we dipped below this May resistance here, but buyers came back in and held there. So if we can hold this, I don't see why we can't retest, 12,800 as a handle, and then the 13,000 level. If we dip back down, I would like to see this resistance trend line get tested and held. So this would potentially be around the 12,000 level, which makes it even spicier. My mistake. So today we have the Fed officially rolling out their balance sheet reduction. We're seeing subdued T-notes, 10-year T-notes over here. Yields are up. Uh, at the same time, speaking of yen subdued due to haven outflows, it's the same thing we're seeing here on gold. So this is a longer term support trend line that goes all the way back to August last year. And we are trading below that now. The last time we dipped below was in May. Have since reclaimed, and it's pretty clear indication that the further we continue with this down move and this inflection over here, right? So potentially we might be seeing the dollar just continue to grind further higher, but I would be in the camp of just kind of holding back. We might see some consolidation with prices going for the time being, so ranges might not be too crazy due to the fact that we're getting the NFP numbers on Friday. So that would be the important thing. So for loony traders, we have Bank of Canada today announcing rates today. The next, the the one thing that I do want to mention is this Aussie chart because it is looking very, very nice. So if the dollar continues to appreciate, we might see a break of the support trend line and to make a test of the 71,000 handle. So a short on the retest and potentially a long, and I wouldn't mind the long from the 71,000 handle due to the fact that it's a strong support level. And second thing is Australia is in a good place right now. So really decent data. We're seeing financials just on the bit today. The ASX 200 pretty much was supported entirely by financials today. So a longer term, a long on the 71,000 might be in the cards if we do get a retest. I hope this was useful. Any questions at all, feel free to hit the comments and I will try to get to them as soon as I can. Have a great session ahead. This was Reed with the daily briefing, and this was Done Capital. Cheers.